Hello friends, we are from Group 6. Would like to show the result of our discussion. Our members are Esther, Reva, and Wulan. Our group material about corporate income tax.
Definition of income tax (PPH). In general, the definition of income tax (PPH) is a state tax imposed on any additional economic capacity received by a taxpayer, both from within and from abroad, which can increase the wealth of the taxpayer concerned.
2. Type of corporate tax. One type of corporate tax, PPH Article 35. 2. Type of corporate income tax, Article 21. 3. Type of corporate tax, Article 22. 4. Types of income tax, Article 23. 5. Type of income tax or income tax, Article 25. 6. Type of income tax or type of income tax, Article 26. 7. Types of corporate tax, PPH Article 29. 8. Type of corporate tax, including income tax, Article 4, Paragraph 2.
3. Provision for calculating corporate income tax. The provision for calculating corporate income tax are regulated in Law Number 36 of 2008, concerning the Fourth Amendment to Law Number 7 of 1983, concerning income tax. 4. Corporate income tax rates. Income tax rates are regulated in Article 17 of the Income Tax Law, UUPPH.
The generally applicable corporate income tax rate is regulated in Article 17, Paragraph 2A.
Namely, domestic corporate taxpayers and VAT are subject to corporate income tax of 25%. This corporate income tax rate is effective from 2010.
Income tax object. The object of income tax is income itself, whether obtained through online or for offline transactions. The stipulation is that any additional income received by the taxpayer, which adds to the taxpayer's wealth, must be subject to income tax. The impositions of online buying and selling tax obligations is also equated with offline buying and selling transactions. Thus, the tax provisions that apply to online businesses are no different from conventional businesses. For online businesses, actors or companies engaged in online business will be subject to taxable entrepreneurs (PKP) the obligations to pay taxes arises when earning more than 600,000 rupiah.
Gross turnover in 2019 corporate income tax calculation. Gross turnover is the total income received both by individuals and entities. If the taxpayer chose not to do the bookkeeping, the taxable income or PKP will be calculated based on the net income calculation norm. On the other hand, if the taxpayer does the correct bookkeeping, then the calculation of the taxable income or PKP is carried out based on the records that have been written in the books. You can observe the norms for calculation net income in Article 14 of Law Note 36 of 2008. Concerning income tax, according to the tax rulers, the taxpayer who will ask the calculation norm must notify the Directorate General of Tax within the first 3 months of the tax year concerned. Corporate income tax calculation mechanism. 1. Taxable income. Nominal taxable income, or PKP, is obtained by reducing fiscal net income by compensating for fiscal losses. Fiscal net income is net income received by domestic taxpayers, both from business activities and not after going through a period of fiscal adjustment in accordance with tax provisions. Meanwhile, net fiscal conservation is the loss suffered by the entity or company. If using bookkeeping, the value of the loss can be compensated for 5 consecutive years. In another sense, taxable income is the income of the taxpayer, which is the basis for calculating income tax in a tax year calculated by subtracting it from income. Tax are funds collected from the public that are used by the government to finance the state or the state budget. Everyone who already has income is obliged to pay taxes. The calculation of taxes applies equally to all groups.
Calculating corporate income tax payable. The nominal income tax payable is obtained by multiplying the taxable income with the applicable tax rate according to the tax rules. The tax rate imposed on the company is 25%. This provision is based on Article 17, Paragraph 1, Part B Law No. 36 of 2008 concerning income tax. 25% tax rate has been in effect since 2010. You need to know that income withheld by final income tax is not included in this provision. The final tax rate has been regulated based on a government regulation.
Tax rate lower than 25% may be imposed on domestic taxpayer with the following terms and conditions. The company is in the form of a public company or PT. The company owns at the least 40% of the total number of shares paid up and traded on the Indonesian Stock Exchange or EDX. The tax rate charged is 5% lower than the normal rate. Company income tax calculation example. PT Malika Bina has a taxable income of 175 billion. The corporate income tax rates to be paid are 25% times 175 billion Indonesian rupiahs equal 437.5 million Indonesian rupiahs. Example of corporate income tax calculation. In 2017, PT Malika Jaya had a gross turnover of more than 4.8 billion rupiahs. In 2018, PT Malika Jaya had a gross turnover of 25 billion Indonesian rupiahs with a taxable income of 2 billion Indonesian rupiahs. The following is an illustration of calculating the income tax. Taxable income that obtains facility equal brackets 4.8 billion rupiahs per 25 billion rupiahs brackets times 2 billion rupiahs equal 384 million rupiahs. Corporate income tax payable 12.5% times 384 million Indonesian rupiahs equal 48 million Indonesian rupiahs. Corporate income tax payable 25% times 1,616 billion Indonesian rupiahs equal 404 million Indonesian rupiahs. Total corporate income tax ought to be paid 48 million Indonesian rupiahs plus 404 million rupiahs equal 452 million Indonesian rupiahs. Thank you to friends who have listened to the result of our